holdings in the world's largest gold-backed ETF also rose on the back of the meeting's outcome. Joining us around the studio now is Diego Perilla, who is Managing Director of Commodities at Old Mutual Global Investors. Diego, you've called it a perfect storm for gold. What does that mean?
As a framework, basically it tells that we're at the beginning of a multi-year bull cycle. It's part of three building blocks or three phases. The first one is we're testing the limits of monetary policy, which is leading to potentially the biggest bubble in duration that we've seen in history, led by quantitative easing, negative rates, and government bond buying. This is incentivizing, but more likely forcing investors to look for yield by going into lending to weaker and weaker credits, lending farther and farther out. So the second order effects of this epicenter of the bubble is it's creating asset bubbles in other sectors, be it credit markets, be it high yield, be it emerging markets. The weakest guys benefit most. And this is basically a cycle that continues. When things happen, you need to, like we saw in China or the US, you need to go lower for longer, and that can lead eventually to problems in the third phase, which is currency.
You're a gold trader, so talk me through the action we've seen on the gold chart this year, because we had a strong movement higher through to about March, and then we had a sideways action movement, then we saw movement back around June, which took us to the current levels where we've traded sideways. So it's very choppy in terms of we get a strong move, then nothing, a strong move, then nothing. Are we setting up for another strong move? Is that what you're telling us?
Yeah, basically December said the absolute low. So there was a lot of expectations in terms of what's, the hiking, the tapering. So what you saw is basically the side effects. The market was extremely oversold. The sentiment was super negative, and this is true not only on the gold itself, but also on the miners. So what you saw, this first leg up, 25–30%, to me is just a normalization of what were extremely distressed levels. We're now in a level that is more stable, both for the miners as well as the metal. But the view is, to me, this is a very asymmetric outlook with a few $100s of downside, but a few $1,000s of upside if this perfect storm plays out.